This is a podcast by the Straits Times and Money FM 89.3.
Welcome to Asian Insider, podcast series by the Straits Times. I'm your host, Nirmal Ghosh. Now, May has been quite an interesting month in terms of U.S. policy on Asia. We had the U.S. ASEAN summit at the White House in Washington recently, and we've had President Joe Biden visit Seoul and Tokyo as well. But beneath all these high-profile meetings, life does go on for ordinary people, and one issue of great concern in China and in the region and possibly globally is the way China is dealing with its COVID pandemic. Now, I am very glad to have with me Dr. Lurong Chen, senior economist at the Economic Research Institute for ASEAN and East Asia, based in Jakarta. Welcome to Asian Insider, Dr.
Pleasure
Chen.
to join.
Good to see you.
Thank you.
And from Beijing, Straits Times China bureau chief, my own colleague Tan Dawn Wei.
Thanks,
Dawn,
Nirmal.
good to have
see
you back. So, Dawn, may I start with you? Could you give us an update on the situation in China in terms of the economic fallout of China's COVID policy, the lockdowns, the restrictions, and so forth, which have been carrying on for weeks and, in fact, months in some cases?
Well, I think we haven't even fully begun to tally up, the economic cost of this COVID policy. Shanghai is only slowly emerging now from a citywide lockdown that started in early May, and it plans to end this lockdown by next month, but only if there are no rebound in infections. And since last Friday, they found cases outside of the quarantine areas and put a few more districts back into lockdown. So there's really no saying when the city will be fully open and when businesses can resume and people can go back to work. The economic numbers are not looking very good so far. The April data across the board have been the worst since February and March 2020, which was when COVID first broke out in Wuhan and then spread to other provinces. And this is for retail sales and also for factory production, which has been hit badly by the lockdowns, which have disrupted supply chains. And, we've seen property sales and car sales plunged by nearly half. And also the jobless rate has gone up to about 6%, which is also the highest since February 2020. So it's going to be a challenge for China to meet its GDP target of around 5.5% this year. And economists have mostly revised their forecast down, some to as low as 2%. So if China persists in its COVID policy, beyond May and into June or even longer, then the recovery is going to be even harder. Already the chambers of commerce, such as the EU and American chambers, they've said that in recent surveys of their members that, an increasing number of these foreign companies in China are considering relocating their current or their planned investments out of China to other markets. And you might have seen there was a recent report by the Wall Street Journal saying that Apple is looking at shifting some of its production to other countries, and they're looking at possibly Vietnam and India. And this is, of course, also driven by the China's COVID policy.
Is there any evidence of a bit of a rethink starting
in
China?
Of this policy?
Of the COVID policy?
No, in fact, I think they have doubled down on this policy, and that has been put forth in through propaganda and the state media, basically saying why they need to stick to this policy, because if they don't, it's going to a country as big as China. They will have a significant number of deaths, and that would be too costly for them. So, they have said time and again that yes, this is, we are facing challenging times economically, but then this is only temporary and we will get through this.
Okay, Dr. Chen, Dawn referred to supply chains. Now, obviously, this must be a concern in the region. Can you tell me a little bit about that? Could you elaborate a bit on the ramifications of what's going on in China, the slowdown in China on the back of this issue for supply
Sure.
chains regionally?
Thank you. Yes. From economic point of view, I think this COVID pandemic and the consequent lockdown measures trigger a crisis we call a supply chain crisis. So there's economic shocks from both the demand side and the supply side. And one reason is that we know that globalization and global value chain already integrate global market to quite a high level. And China, we also always call it the world factory of manufacturing products. It's one of the world's largest export of consumer products, especially. So when China shut down its border to prevent the virus outspread to the rest of the world, the first so we can see is that the export from China sharply decreased. And then this will have significant effect on the world total supply. So you see that there's no good supplies from China anymore. And this is a supply side shock. But on the other hand, we also know that behind made in China is a whole global value chain there. China need input from other countries in terms of intermediate products, raw materials, parts and components, and a big variety of different kind of services activities. So when China shut down, the direct effect is that the upstream supplier to made in China see that the demand vanished. So there's no customer or the order got cancelled or postponed. So this trigger we call it demand side stocks. So with this and via this value chain connected to every country together, we see that the measurement in China actually spread out to the whole world, and everyone can feel the consequence of the policy. So this is what we can observe here. And if we want to go deeper, this COVID pandemic effect is actually it changed the trade costs. Before the COVID, we are enjoying from the low transportation costs, low communication costs. But during the COVID, with all this measure, what we see is that the increased price, increased cost of transportation, and also the increasing price of communication. And people always say that digital solution can provide a kind of backup or alternative to deal with the situation. But here we need to be more conservative or more realistic. Yes, digital solution to some extent help to deal with the increasing cost in communication because we can use smartphone, use internet to talk to each other, communicate each other. This will facilitate the ongoing of global value chain. But on the other hand, we see the transportation part. What digital technology can do today is still quite limited. We still need ocean transportation. We still need air flight to send cargo from one place to the other place. So with this, we can see that this COVID pandemic actually affect everyone via the links to the global value chain. Yeah, thank you.
Yeah, so essentially, there's there is growing fear of a global recession. There's inflation is very high across a lot of the globe, especially in the West, especially where I sit in DC. It's a huge domestic problem, in fact. So there's a lot of fear of a global recession, and this is in part due to the war in Ukraine, of course. And I would like to get to the issue of food security later. But staying with the recession first, I mean, if the situation in China drags down regional economies as well, does it become one more factor feeding into the prospect of high inflation followed by a recession?
Yes, I think so. I do think so. China is one factor, but biggest factor is that many countries kind of a rescue package during the COVID pandemic. You have this fiscal expansion to deal with the most kind of urgent situation, and we can see that many countries are running this red book to deal with COVID. So this expectation and recession is something within people's expectation. The point is that how big it will be and how we can deal with that. So related to what I said, one way we should think is that we know that high inflation and possible recession is chasing behind us. So what we think is how we can run faster. So from the regional perspective, we were seeing that what could be the new engine to drive the region to develop faster and so the global economy. And this is why many people here were seeing that to accelerate digitalization could be a way to create new industry, create new demands, new supplies, and create new job opportunities. And this is something fundamental to economic growth. And at this circumstance, it could also be part of our solution to deal with the post-recession and also this inflation pressures on the global economy.
I see. Dawn, coming to the issue of food security, this is the UN has warned that the Ukraine war is a frightening new factor in terms of global food security. Ukraine is the breadbasket of the globe, of course, certainly Europe, and aside from that, of course, there's high energy prices, which is a different matter altogether. But is there concern in China about food security in China? Given all these factors at play here, the disruption within
Yeah, for sure. I mean, China, it has a daunting task of feeding 1.4 billion people. So food security is a major priority for the Chinese Communist Party. And with climate change, with all these geopolitical tensions that are happening and also global uncertainties, there has been a huge push for China to be self-sufficient. And President Xi Jinping has, in fact, spoken about this many times in the past year or so, and he famously said, the rice bowls of the Chinese people must be filled with Chinese grain. China is the world's largest producer of wheat, but it also relies on imports of soybean and oilseeds to meet its needs. And these are the crops that Mr. Xi has ordered officials to boost production for. And the Ukraine war has given this mission, urgency because of rising food prices and shortages. But China appears to be coping okay for now. I mean, the fallout from the war hasn't impacted food prices here too much. It has, large reserves, especially large grain reserve, for instance. But it does need to, quickly improve agricultural technology and innovation in order to be able to ramp up its productivity. And it has also been diversifying its import sources. For instance, it's now importing corn from Myanmar to reduce its reliance on Ukraine. And it is also pushing Chinese companies to produce fertilizers, which it imports from Russia. And Chinese experts have come up with suggestions to tell the Chinese government that you do need to also look out for the farmers and improve incentives for farmers by providing subsidies to them, to plant corn and soybean, for instance, and also to reduce food waste along the whole chain, from production to transportation, storage to consumption.
Interesting. Dr. Chen, could you tell me something about the regional picture in terms of food security? Is there a new consciousness of the food security issue on the back of the war in Ukraine and all these disruptions?
Well, sure. And I think this food security issue is very important to the region as well, given the region has a very big population as well. And when we talk about food security, we think about whether there enough food to feed people, and also whether the price of food is affordable to people. So for the region, is thinking that there's still large poverty population here. This price of food is something that region need to really care about. But frankly speaking, I don't think this the Russia-Ukraine war, the direct effect on the region is much, because there's quite limited bilateral relations between most ASEAN countries to both countries. But the more impact will come from this Russia-Ukraine wars on the global commodity price, and also, as you mentioned, the energy price, because both market, commodity market and energy market, they are highly integrated global markets. So the supply chain, the supply demand balance change can quickly trigger price change, price fluctuation, and then all the country will feel it. So for the region, I think some country this is a good news. If they depends on their economic structure. To some country, this could be a warning sign. But to this point, to the region, I think compared to Russia-Ukraine war effect, a more emergency issue is the inflation issue. So when the Fed decide to raise its rate and then trigger the US dollar to flow back to the United States, what region worry about whether they will trigger the capital outflow from the region. This is the most serious issue the region concerned about, to prevent that from happening. We all know what will happen if there's a capital outflow from the region. So above all, this will be a policy priorities to make sure that the region keep its attraction to global investment and capital inflows.
Okay, back to you, Dawn, for a moment. You have written about the fatigue factor in China, really fatigued, and in fact, you probably must be fatigued as well, and your and our colleagues out there. Could you elaborate a bit on this fatigue factor, and are there possible political implications to this?
I mean, we are seeing it manifesting most on social media, and also in our conversations with people. People are fed up, and they're not really thinking twice about complaining now. While in the past they might be a little bit worried about the repercussions of speaking their minds. They see that the rest of the world has opened up and moved on, but China appears to be kind of stuck in a loop. It's reliving cycles of the same thing: lockdowns, mass testing, quarantines in schools and businesses opening and shutting. And this has gone on in various parts of the country every time that there's been an outbreak, for the better part of the last 2 years. And in the meantime, the government continues to tell them, our COVID policy is the best policy for us, and it suits our conditions and our needs, and we have to stick to it. But people are asking, when this is ever going to end? They have dutifully heeded the government's call not to travel. And in fact, the government has just last week made it harder for them to leave the country. They've done what the government told them to do, to get vaccinated, not once, twice, but 3 or 4 times now. And yet there doesn't seem to be an end in sight. And the Chinese government hasn't particularly done a good job of reassuring the citizens by giving them some kind of a timeline or spell out a more specific plan, some kind of a game plan, so that people can have something to look forward to. In Beijing, where I am, we've been living in this semi-lockdown state for about a month now, and most things are shut, and many people are working from home. And we look over to Shanghai and we think, well, thank goodness we're not in that situation where people have been confined to their homes for 7 weeks now. But people here in Beijing are also on tenterhooks. They're worried that Beijing could go into a proper lockdown if the infection numbers suddenly go up. So we've had a few episodes of people rushing out to the supermarkets to stock up on food whenever they hear a rumor that Beijing is heading into a lockdown. I think for most people, they are worried about their livelihoods. Businesses are suffering, and unemployment has gone up so much so that the government had to step in to provide some temporary allowances to migrant workers who have lost their jobs. And retrenchment is also happening at many of the big tech companies here. And then compounding that problem, we also have a record number of college graduates this year. We have 10 million graduates this year, and they're not going to all be able to find jobs. So back to your question, will this come at a political cost? I don't think, not at the expense of regime change for sure, but there have been talk that President Xi has, made some policy missteps with COVID, with, his alignment with Russia. And that has caused much unhappiness and divided opinions within the leadership. And these policy missteps could possibly weaken his hand when the 20th Party Congress comes around at the end of this year. And that might make it harder for him to install his people in positions of power. But there is nothing to indicate for now that his own position is at risk or that he may not get a third term at the party Congress.
Right. Dr. Chen, I'll let you have the last word if you could. From your perch in Jakarta, it's quite interesting. What is the view of what's happening in China from Southeast Asia?
Southeast Asian countries, China is the largest trading partners, and increasingly there's more and more investment from China. So to country, I think keeping the benefit or economic reward of keeping close relation with China is quite straightforward. And one thing I like to add is that, yes, during the COVID, we see that many foreign invest companies, they are thinking to move out of Chinese market. But I don't think is something that COVID pandemic made them to do this decision. But actually, something happened already before the COVID. Is behind that is the increasing labor costs, and so the industry relocation from higher cost place to lower cost place. So economically, that perfect sense. But you are right that during the COVID pandemic, that kind of accelerate this relocation process. But in general, especially to the region, especially after the conclusion of RCEP, I think we should be able to expect there's another period of kind of a honeymoon period between ASEAN countries and China from the perspective of economic cooperation and closer trade and investment relations bilaterally. Yeah. Thank you.
That's very interesting. Okay, well, Tan Dawn Wei, Dr. Lurong Chen, thank you very much for joining in Asian Insider again today.
Thanks,
Good to see you.
Thank you very much. Bye-bye.
Thank you. That nicely wraps this discussion up for the Asian Insider podcast. I'm your host, Nirmal Ghosh. Join me and my expert guests for the next episode on the fourth Friday of every month.
The Asian Insider Podcast channel is also available on Apple Podcasts, Spotify, Google Podcasts, and our audio app. That's AWEDIO. Like us and rate us.